Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief Friday style. I want to give a big shout-out to my alma mater, the Montana Grizzlies. Going to be in the stadium watching them play tomorrow against Western Carolina and really a ranked matchup, so I can't really wait for that. I'm excited about football, love football season. Also love the markets, and we've got a lot going on today, so good to see everybody back. Martin, good to see you. Marcorp, thank God it's Friday. It's been a long week, I'll tell you that. Dibble, always a pleasure. Dibble, good stuff. Catmandu, good morning, good evening, wherever you may be. Let's get right to it. The markets are open for business. A couple of things that we need to talk about. WTI, sure, we'll get on the WTI tip as well. There's the Baker Hughes rig count coming out here. Actually, it just dropped, so we're going to look at our economic calendar, maybe do a little WTI trading. We've got a lot going on, though, and really the headliner here today is gold. I've got 50 questions on gold, so let's just get right to it. Right here is the gold market. We talked a lot about areas of natural resistance. Remember, gold is trending. No two ways. Gold is trending. Jeanette, good to see you from Greece. I hope your vacation's going well. Gold is trending. There's no two ways about it. And the number one way people lose money in this world, in the markets at least, in the financial world, is they fight trends. And it doesn't matter if you're short houses, or if you own a bunch of houses in a downswing, or if you own if you own a bunch of lemonade and nobody's buying lemonade because it's in December and the snow's flying. It doesn't matter. If you find yourself fighting a trend, you're doing something wrong. Now, there's a big difference between fighting a trend and scalping against a trend. And what I'm going to do is I'm going to sort of lay out exactly how I'm looking at gold, exactly what I think is going to happen in the gold market. And right now it's unfolding pretty much the way that I thought it would. I thought once we broke above that all-time high back here, guys, once we shattered this area, somewhere right in there, that 25.59, 589. I mean, we sort of knew what was going to happen, and you could see that this is just an absolute huge uptrend. So when I'm looking at my charts, the first thing I'm thinking is, okay, I want a 4-hour chart for gold because it's a 24-hour commodity. It trades all 24 hours, and I know that they all do, but gold is sort of the exception. It's like a Forex pair, especially spot gold, because you have a tremendous amount of volumes that come across the board during the London session, and typically we see all of our trading volumes in the New York session. Now, gold's different. You have to approach at least spot gold. Now, gold futures, that's a different animal. Maybe we'll do some videos on futures and things, but when we're talking spot gold, we're talking 24 hours, 4-hour charts, incredibly important. Let me see. No Donation Friday. Absolutely. We're going to talk psychology in just a second. But right here, this was sort of the trade that we were looking at earlier today. I actually put this one out on X, I believe. And this right here was a 4-hour, nice 4-hour sequence. Spike low, spike high, pullback. Right there, we're buying 206s, 207s, and it's just been an absolute banger of a trade. So the real question that I've been asked repeatedly is, okay, how do I trade gold now? Now, you'll notice I don't have any indicators up. We're just going to go straight up price action because we're trending. And I don't really want to hear about something being overbought right now. I got that put to me earlier today. It's overbought. It's overbought. It's overbought. And I know it's overbought. The problem is, and with all momentum oscillators, if you're an RSI fan or if you're a stochastics fan or a MACD fan, I'm not trying to throw shade on your strategy. Keep using. If you're making money, it's the right answer. Keep using it. Keep using it. But understand, if you're using something like a MACD, or if you're using more to the point, an RSI or a stochastics, if you're using those indicators, this thing is going to look overbought, and it's looked overbought pretty much since we crossed $2,000. If you get caught in a serious steep uptrend, you're going to lose a lot of money trying to short these markets using momentum oscillators. Now, these trends are rare. They really are. I mean, these are relatively rare. More times than not, the rule is rotation. Take a look at what we had right there. Fed. There's your Fed, sort of your Fed bar, your Fed 4-hour bar. We traded inside of that. But look what developed. Real tight. I mean, it's almost a bullish pennant. Tight, compression, break. And you think of it like I don't want to say bomb necessarily. I think more like a pushing a spring in, just you're compressing the springs, you're compressing the spring, you're compressing it, and then it finally breaks. That's how price moves. We rotate, we move, we rotate at a value area, we get compressed because buyers and sellers are duking it out with each other. Nobody can win, and then bang, one of them wins and price moves. Especially in a market like gold where there's a ton of participation. Absolutely huge. No Donation Friday. Absolutely, Davison. We're going to get to it. We'll get it. In any case, right here, this is a big-time breakout. So, Shane, enough with the concepts. How do I trade it? Right now, I mean, this is really tough for me not to go right down to a 30-minute chart and say just buy all pullbacks. You can't really go wrong doing that as long as you don't let your risk versus reward get out of hand. And what I mean by that, I'm going to design a scalp for you right now. The low is going to be 26.1132. What's that low right there? 26.1140. There's our spike low, and this trade's coming our way right now. Do I want to buy 38%? Absolutely. Do we want to buy it? Yes. Now, the real question is 26.20, 37. We're going to do the best we can because we're moving fast here. But right there, I'm going to eyeball it. That's good enough for me. 26.20, 33. I'm looking at 26.20, 50s. Why would I go in above that level? Because I want to get in on the move. I'm going to shade my entry right up in here. Now, did we already hit it? The low right there, 26.20, 90. Not yet. What would my risk versus reward be? Now, you have all sorts of options, and this is really the area where I see traders running into big problems and losing a lot of money. Remember, if this trade turns out to be a loser, it's going to be a loser, and there's nothing we can do about that. But what we can do is we can control how much we lose on it, and it's a fine line between playing too tight and too loose. That's the bottom line. That is trading. If I want to play loose, I have a higher probability to win. If I want to play tight, I have a lower probability, but if I do get stopped out risking that huge risk versus reward, that big stop loss, then I'm going to have a real problem coming back from that. So it's always balancing these things. For me, I'm going to get what you're going to get right up front. I mean, get front and center. I mean, if I can step up to the plate right here, 26, 20, 50s, something like this. Let me see if I got my dome open. 26, 20, 50. Let's go ahead. We'll go. I'm not going to sign a take profit to this. I'm going to go 26, 20, 50. That's going to be my entry. I want to buy limit order. Okay, let's put it in the queue. All right, we're queued up. My first boss was a stickler. He said, Shannon, as soon as you see a trade, get in the queue. Get your orders in the queue. I still laugh at him because the markets, when we were trading in 2011 together, they weren't nearly as big and as deep as they are now. So you don't necessarily have to get into the queue, right when you wake up in the morning. But he was a stickler about that. Get in the queue. Get in the queue. I can still hear it. In any case, right there, 26, 20, 50 is going to be our entry. Now, what are we going to risk? Let's be honest here. If we're playing a true Fibonacci sequence, something similar to what Elliott Wave traders do, they're going to do something like this. They're going to put their stop loss beneath that initial swing low. I'm not really interested in that. 26.10, I'm not interested in that. If we're going to get that big of a pullback, I want to be able to buy down there. I don't want to just have to liquidate my position and hope that we get another setup in gold. I want to be aggressive right now, and I want to be aggressive to the long side. So where's my first trade right there? Where would I stop myself out at? I don't believe we're going to be able to take that and get an easy $4 move, so I don't really want to risk that either. 26, 20, 50. I would probably go, right beneath this Fibonacci level, right beneath 50%, somewhere down in there would be my stop loss. Probably pad that a few ticks. I always hate to put an exact figure on it because I use a lot of mental stops in my brain. I watch price action, but for the purposes of what we're doing here, that works just fine. So what did we risk? We've got about $2 out there. So what are we going to need to get? 26, 20, 50. We're going to have to get 23.50 to make this worthwhile. Is that a good trade or is it a bad trade? It's with the trend. It's with the pressure. The only question I have, I'm relatively certain we go higher from here. Now, the only question is did we give this thing enough room to work? Now, if we want to risk more than that and we just want to go long the market and, be damn, whatever happens, then we have to go to a longer time frame. We go to our 4-hour chart that I showed you earlier. We go to a daily chart, and we wait for a big macro retracement, and then we bet a lot on it. I don't have a problem with either. This is a scalp. So we dial down our leverage. We make sure we're not above 1 to 3% of our account balance. We know where we're putting our stop. We know what we've got to get for our profit target. Actually, I'm $1 off there. It's $22.50. Excuse me. Something like that. That looks a little better. I was wondering. 1-to-1 risk versus reward. I want a tight scalp. I want to hit 70% of these trades. Admittedly, it's a challenge to do on a 30-minute chart. So if we're wrong, I just want to get stopped out. I don't want to go along for the ride. Don't want to do that. But right now, the long side is the right way to be here in gold. Now, as far as what I think about the macro picture, I would love for this market to top out and give us a chance to buy early in the week. That'll be my game plan. We'll be working right from that Fed day spike low. We've got a beautiful range to work with. We'll make money buying the Fibonacci retracements off of that. I can't say guarantee, but I almost guarantee that we'll get a pullback buy somewhere early next week. That would be my high leverage play. This wouldn't be it. Where are we going? Well, we're above 26 even. I'm looking hard at 27.50. I think that's the game. I think we go there. I don't really believe that we're going to see any sort of intermediate term top develop in gold. until we get to that level right up there. And that's where I expect to see a little bit of a pushback. I expect to be able to scalp in front of that level. Why not 2,700? Why 2,750? Because quarter handles are extremely important. Everybody knows them, 25, 50, 75 even. Keep an eye on that. Keep an eye on that. I know I will be. So that's gold. I know we spent a lot of time right there, basically 10 minutes on the gold market, but that is it. So we're watching right here. As soon as this thing goes, we'll watch the trade. And hey, listen, we may get swept right out of the box. I'm not saying that that's not going to happen, but I think we have a decent chance here to maybe get this win. We just got to wait and see how it develops. That's all there is to it. A couple other things I want to update from yesterday. You guys that were watching live, remember I said buy the pound and walk away from it. Yeah, that was pretty much the right thing to do. The problem you run into with these types of strategies, like I put a trade idea out yesterday that really wanted a pullback to 38%, right above 132, and we could have got maybe a little bit of money in there, and it just didn't really develop for us. We were, you sort of saw a little bit of a pullback there, but we just didn't get it. We've been grinding north really ever since. The BOE held its rates firm. We nailed it from a fundamental standpoint. I think that was a really easy trade fundamentally to make. We knew that the Fed the Fed cut rates and the BOE held rates. Given that dynamic, you're going to see the Great Britain pound USD move higher. Now, what the problem was with the way that I traded it is that when we bought, it wasn't exactly very easy. We were on the hook for a lot of money because I really didn't have a stop loss. Now, that line was our entry point. You see right here, let's go down to a 30-minute chart. How bad did this get for us? Where did we go long? Right in here somewhere? No, right in here we put it on, right on yesterday's stream. So we bought right in here, right around, right in that zone somewhere. We bought. We got the big rally, and the price came all the way back to break even, then it went lower, and then it sort of drew against us, and then it broke higher. So when I look at something like this, I said, yeah, this really looks like an easy profit and easy money. Just buy the pound and walk away from it. But look at that roller coaster ride. You went way up, and then what? You came down to break even, and then you went up again, and you came down to break even, and you went up again. So what I'm trying to say is this. Even though you're going to rack this, I'm going to close this trade right now for a profit. It wasn't the easiest thing in the world to do. That's what happens when you trade fundamentals. You need a lot of money and a lot of patience. I don't know that anybody in the room's there. I certainly am not. I don't have the kind of patience to sit around and watch a literal fortunes go by my face, especially if I'm trading big size. So this right here was a very good market read fundamentally, but as far as how could we practically just step up and buy the market? Not really. Not really. It costs a lot of money. That's why we fall back on our technicals. So right here from a daily perspective, I already know what I'm going to do next week. I'm going to be buying pullbacks all week long. Why? Because our fundamentals say to. Is there any way that I can get long maybe right now on this pound dollar? Not really. Not really. I mean, we could go from here to here, but look at what's happened. We have a spike high right there and a spike low. We're just sort of flatlining. So I'm going to stay out of that for right this second. But I got to tell you, it was a pretty darn good market call. Buy the pound and walk away from it. And you'll see right here in this Bank of Japan stuff that we're going to cover here in a second. This was sort of the big trade. I understand that the leverage is huge. Don't let these dollars fool you. These are demo dollars. I put on this massive contract, but it was a buy. And why was it a buy? Because we had an inverted hammer on the monthly. And I said, listen, I love the fundamentals here. What happened last night? BOJ holds rate static. Okay, they don't do anything hawkish, really. What happens? This market jumps. And why did it jump? Because of fundamentals. Now, is that a practical trade idea? Could you actually trade that? Not really. From a fundamental perspective, not really. It's too expensive, guys. Where would I stop myself out at? I mean, I was looking at a monthly chart making a market read. I have no doubt in my mind this market's going higher, and I think this could be an intermediate term bottom that's set up, that monthly hammer, followed by a doji. We could definitely move higher, but we're going to have to be a little bit smarter about what we do with our entry point. We've got to be a little bit smarter. So I'm going to close that out because it's distracting. But if you want to really think about how to attack this Great Britain pound Japanese yen, same basic game plan as that Great Britain pound USD. But I love this one even more to the top side. Let's go ahead and take a look at a weekly. Is there any way we could get a weekly? All right, not really. Is there anywhere we could maybe sell? Well, your weekly wave is sort of shot. I would be watching this spike high very closely that developed to open September. That's our monthly highs right now, 193.50-ish. That's going to be key. There's going to be some sellers right in front of that in the guppy. Almost guarantee it. The real question is what do we want to get accomplished here? Do we want to be long or short? I want to be long, especially given the fundamentals. But, until we get a pullback on the daily, I love the daily pullbacks, guys. I really don't see how we're going to be able to go wrong there. The real question is can we get anything better than that? 4-hour chart? Yeah, this isn't bad. Spike low, spike high. Problem is we sort of missed it. That low right there's 190.91 and 190.75. That wasn't good enough for me. I would have been looking to do something different there. But you definitely can see where we're headed. Keep an eye on that spike high, which is right up there, right around 193.50, and that's going to be September's high. As far as a long-term resistance zone, remember, we're not making all-time highs here, so this is a lot different. This is a lot different than our gold trades that we just went over. What is this? Monthly chart. I know everybody's rolling their eyes on the monthlies. They're very important, very important. Broke above that 38%. I probably wouldn't be looking to be serious about selling this market until it got up to about 197-ish. But until then, I'm not interested in doing much of anything but buy it. Broke above 38%. I want to buy, and buy some more. If we do get a chance to buy a pullback on a daily, that would be absolutely beautiful if it lined up with that level. I would have a lot of confidence that we were going higher from there. So definitely want to check that out as well on that Great Britain pound, Japanese yen, or the guppy, as they call it. It's a fantastic pair to trade. A lot of volatility, and we nailed it. We nailed the fundamentals on that trade. I thought it was a relatively good trade to make, and I thought it was one that you kind of had to, but you didn't have a stop-out point. And if you don't have a stop-out point, I highly recommend not making the trade. The problem is you can be right and lose all your money. That'll drive you crazy. That'll drive you crazy. I don't want anybody to go crazy. Let's see. You got a bunch of messages popping in. I wanted to hit those points real quick before I got on. Let me see. Yeah, absolutely, guys. You guys are too kind on the YouTube feed. Thank you. What do we have cooking right now? Well, double your deposit, 100% credit bonus at Switch. If you need a broker, be sure to check it out. Friday, BOJ interest rate decision is the biggest thing. I said BOE Thursday, BOJ Friday. That was it. Remember, no donation Friday. A little bit of psychology lesson if you're brand new. This was a big week. I'm going to go full disclosure. There's a couple things about my streams I'm going to tell you straight up. I trade real money and I trade futures. That's what I trade. That's what I focus on. I've been known to trade some Forex pairs, but most of what I like to trade are the majors on the futures markets. Real similar price action. It's not the same. It's real similar, but I just choose to attack there. So if you guys are trading Forex, that's great. That's absolutely great. I got a Forex account. I got a couple of them when we look to trade those cross pairs that don't have a futures contract. That's fantastic. This week was a challenging week. And as excited as I am about central banks, they screw things up. They screw price action up. And I was very much on the sidelines for most of this week. So this week to me was one of those where I would rather watch and see what happens because I can make enough money next week to cover it. Always remember that. You can make enough money in just a few hours being in a hot market, whereas you can make in just days and weeks sitting there in front of a dead market. This week, the markets were alive, no doubt about it. But we really had a situation with our news cycle that made it a challenge. So I'm really going to stress these points. I think it's incredibly important that we understand our psychology. No donation Friday. This game's all about momentum, and if you made a stack of money this week, take at least 50% of it home. I put this together from my own beats over the years, my own experience. If you made a bunch of money this week, take 50% home. If you made a little bit of money this week, take 50% home. If you made a few $100, I know it's probably not what you wanted, or if you made $50, it's probably not what you wanted. Take half of it home. We're going to have a better week next week. Next week's Monday is always the best day. The next trade is always the best one. The best action is always tomorrow. Always remember that. Winning week, take 50% of your profits home. I want you going into next week rested and profitable. If you're having a losing week, if it's small, trade it as usual. That means you did okay. There was a lot of volatility out there this week. If you lost a little bit or you're at scratch, trade it as usual. I don't have a problem with that. If it's a losing week, if it's a big losing week, if you got your clock clean this week, quit. Come back Monday. Take a break, step back, evaluate what happened. You know, some of my biggest losing days have been Fed days. I didn't even trade Wednesday. Didn't trade Wednesday. Why? Because the last 2 Wednesdays where we've had Fed meetings, I've got my clock cleaned. And I don't do that. I'm not into that. I'm not into losing big money. I don't like it. It ruins my day. So I didn't trade it. That was sort of one of my rules now. I don't trade Fed day. Now, if you got your clock cleaned, quit. come back Monday. Come back ready to go Monday. We got a whole new week, whole new opportunities. And if you're neutral, if you broke even this week, you did pretty good. You won some, you lost some. You can either trade as usual, cut your leverage to get some consistency, or don't trade at all. That's the concept behind No Donation Friday. I know a lot of you have heard that a million times, but for the new folks, I like to stress that, especially on a week like this week. Absolutely imperative that we preserve our momentum where we can. All right, everybody, the BOJ decision. This is absolutely key. This was the big event. I know Connor covered it a little bit earlier, but they came in at 0.25%, a 0.25%, and that 0.25% really is telling about where the BOJ's head's at. Tremendous dynamic in Japan right now. They can't cut interest rates. They can't cut them, and they love to. The BOJ and the Bank of Japan and the Japanese government, they love to run a negative deposit rate, and a lot of that has to do with the amount of debt in their economy, and also it has to do with that export sector. I covered all that yesterday. So what exactly happened? 0.25%. So they held the line. The Bank of Japan unanimously retained its key short-term interest rate, about 0.25%, highest level since 2008. Highest level since 2008. Write that down. This may be the strongest the yen gets for a long time. It really may be. Now, I know everybody else is cutting. Rates right now. Theoretically, you're going to see that yen sort of come into balance. Now, the longer that they hold this, theoretically, the stronger your yen's going to become against your foreign currencies. But remember, 2008. And then those rates went down to zero. I see the yen. I see the BOJ slashing these things as soon as they can. And I think their rate cut's going to go from a 0.25 point to a negative deposit rate again. If, in fact, that's the case, then we're going to have to be looking at ways that we can get long on big retracements against the yen. And I think it's a pretty good deal. And I'm excited. I can't wait to bet against the yen again. We just got to wait and see exactly how it pans out. Here you go. A little bit of historical context going back over the last year. Boom, boom, boom. Really nothing there. A couple of rate hikes. This is the chart that I really like. You can see these massive peaks when Japan was up over 8%, 6%. I mean, we haven't seen anything like it. What happened? We had really interest rates that were sort of in the boom time for the Japanese economy. Then we saw a recession, and then we had a crisis right around 2000. Deflation became a big, big problem. The deflationary aspect of the Japanese economy was stifling, was really a problem. So we fast forward in time and we adopt Abenomics right around 2010, 2012. What was Abenomics? Three-pronged approach. What'd you have? You had a negative deposit rate, reduced governmental regulations, and also the emphasis was on just an incredible amount of lending, flood the market with yen. And the reason why is to flood really, give the businesses the yen that they needed to grow and also keep that yen devalued. So abroad, those exports were going to be hyper competitive. So that's a long way of saying right now the yen is showing strength. There's no two ways about it. But is the run over? This is a good looking 30-minute chart. I pulled up a 30-minute chart because I wanted to show really going back to that overnight. You see right here, boom, there's your big rally. And then you're sort of milling around, just sort of rotating. So what's this huge line right there? It's topside resistance. And this was an area that we pointed out yesterday. Very important to understand how your macro levels, your macro support and resistance levels dictate. They really do dictate short-term price action. That's the crux and the bread and butter for what I do. Long-term anchor points that I believe in, and I trade them on short time frames. And essentially, that's the name of my game. Now, it doesn't have to be the name of yours, but I found over the years these long-term levels, especially weeklies. Weeklies are fantastic, but dailies are great too. That's a great sell up there, 144.30. We go right down to, say, a 4-hour chart. Now, what do we want to do now? We do have a sell. I believe Connor put a sell idea out earlier on the U.S. dollar, Japanese yen. Check it out. He had his levels in. It's interesting because right there, your high was 144.49. You've got a resistance zone right in this area, the back end of that weekly golden zone. And now look at what you have. You have a double doji on the 4-hour. Double doji is a reversal signal. A lot of people would call that a hammer. I would call it an inverted hammer. You could even say that's sort of a hammer. Those are pretty close to being dojis in my book. So I would call those probably a double doji or a double inverted hammer. That's a reversal signal. Now, what's happening to price? Price is rotating back up. Do we go up or down from here? I don't know, but I do know this. Be very careful if you're holding shorts and we break above that level. If we break above that level, you're going to have you could potentially run and take a major draw right up there to 145.61, which is about another 100 pips. So be very careful here. And that's 62% on the weekly. So remember, if we break and run and then take that out, then we're going way high, and that means that we're probably going to break and make a real run at 147.50. So for me, I would be careful with this pair, but if you are short, if you were short up there, I believe his entry was somewhere right up in here. It was a good entry, but right now you're in the green, but be careful because if we break above that 62% weekly, we're going way high, way high. All right, guys, let's see. What else do we have to cover today? We did want to talk a little bit about our economic calendar and the lack of key events. There's nothing there. I sort of took a quick scout and said, well, I mean, there's really no fundamentals that we can cover. About the only thing would be the BOC Governor Macklem speech. Nothing really big happened there. I'm going to go ahead and pull up the dollar CAD. We had Lagarde speaking. So we had a lot of central bankers talking, but there really wasn't much going on, at least in my view. So let's go ahead and get it right out to the dollar CAD, and then we'll go ahead and look at U.S. oil here in the Euro USD. We had an idea out for that as well. So when we're taking a look at this dollar CAD, the only reason why we would think of looking at it today is because you had a governor speaking, a central banking governor speaking. And when you get one of those, typically you get some volatility. For me, the CAD's been a pretty good pair to trade. I want to go ahead and look at the macro position, though, in the macro picture and show everybody what today's trade really means. It's a doji, guys. So you got doji, sort of a bigger doji, sort of a move yesterday, sort of a big range, and now we're just rotating inside of yesterday's range. Okay, there's our gold trade. There was our little bell. Let's see exactly what's going on here. All right, let's go. We're taking some heat. We're taking some early heat. It's all right. We're not above taking heat. We like heat. We love heat. We eat it up. That's what trading's about. Trading's about taking heat, knowing when to hold them. There's a difference between taking heat, taking a draw, and then getting out. And when you get out, I don't expect you to get out when the heat's on. I expect you to get out when it hurts. And as soon as it hurts, we get out. Right now, we're not hurt. We're taking heat, though. The 38% is definitely under fire. We're sort of static right there. That's the kind of price action I want to see immediately from my level. I want to see that market bounce off of our support zone and give us an opportunity to get that big retracement. I don't know how long we're going to be in this trade. I would love to get a print right now of 22.50. We may get it. I mean, we're only about $1.70 off, about $1.50 off now, so we're getting the price action that we want. The real question is where does that next 30-minute bar trade? And I think that's going to tell the tale. But right now, I like what I'm seeing. So if I was executing this trade in the real market, in the live market, remember, these are demo funds. The first thing I would do, especially on a futures contract, is I would go right to my 1-minute chart. Now, I had my 30-minute, identified my levels. I just executed my buy, and now I'm down to my 1-minute, sort of managing the trade. Now, a lot of folks will take a 1-minute chart like this, and they'll say, okay, right there was our pressure. There's our bounce. That should be our new stop loss, somewhere right beneath there. I've had good experiences with that and bad. One thing you do is when you cut these stop losses down according to time frame, your success rate goes way down. And what you'll find over time is that a lot of times the consistency of the market breaks down on a 1-minute chart. And if you've got a pretty good entry like I think we've got right here, I don't really care what happens over the next few minutes. But I saw right here, I saw some bidders. And what I would love to see is a little bit of sustained price action and put in a hard bottom here going into that next 30-minute candle, which starts in about 2 minutes. And then we could get that rotation up and maybe get a sort of a touch at our profit target. This is going fairly well for us right now. I mean, we're with the trend. That gives me a lot of confidence in what we're doing here. Remember, follow trends. If we get swept out, we get swept out. That means volume's going to have to come in and destroy our trade. But right here, things are starting to really look good for us. This looks to me, we're still $1 off, though. We have to go another $1 before we get filled up there at our profit target. But right here, it could have been a lot worse. I'm starting to see things that lead me to believe we could win. Remember, any trade can be a winner or loser. All that has to happen is enough orders hit the market. If we get inundated with a bunch of sell orders, then you're probably going to have a losing trade, and a big block order could definitely do it. But if price action remains unfettered, meaning true, which it should, probability is definitely on our side now. Do we have a chance to win? I think we have a great chance to win. Let's just let this thing roll and see what happens. All right, guys, let's see. I did have another chart up, dollar CAD. Dollar CAD right here has been a good one for us. What I do want to highlight, you'll notice that I don't have any indicators on the chart because I don't want to confuse anybody with this, because this is about as easy as technical analysis gets. Trend line. Remember, you connect a trend line with 2 or more points. Okay? Spike low. This is a daily trend line. Spike low last Friday. Spike low today, Thursday, or excuse me, yesterday, Thursday. Yesterday's low. And what do we have? We went down, took a peek at the trend line, and went up. I would be watching this trend line going into next week's trade. Remember, we had a key levels video out that identified how to trade breakouts on a trend line. If we trade, we've already had 3 tests of this trend line. If, in fact, we break beneath the trend line, then we'd be looking to short. We'd be looking to go short there on the daily. And you have quite a bit of room down here where I think you could probably make a few pips. What are you going to need to make that trade work, though? You're probably going to need a rally in the WTI crude oil market, which brings us to our next port of call. WTI crude, this is a 12-month chart. This is a yearly chart. I pulled this up because I'm doing some analysis for Q4. I'm going to put a piece out here probably early next week on Q4 crude oil. But take a look at how tight this year's been. I mean, we are flat. 9 months into the year, we are flat. So you definitely want to take a look at where we're at for the year. I know that this is sort of a real challenge to trade these levels, but don't underestimate the power of long-term levels, guys. Don't underestimate them. 62%, 49 and a quarter. Do we get that? Probably not. You probably get a chance to buy 49 and a quarter, 49.50s somewhere in this golden zone if, in fact, Trump wins the election. That's a major bearish market driver for WTI. If that happens, you'll have a chance to buy down there. So I would definitely be watching this closely. But as far as what can we do right now, today, let's go ahead and pull our daily chart and get more current. I understand that you guys didn't tune in to watch a yearly chart. This is pretty good stuff. You know, it's an hourly chart. Excuse me. Daily chart, you know, still pretty good stuff. You can see that pullback was really beautiful. Right there, spike low, spike high. Where did it go to? 38%. That's like a magic trick. That's beautiful. What's today's low? Today's low, 70-40, 70-38, something like that. It's fantastic. Absolutely fantastic. So what can we say now? We've already gone. We're bullish. We're bullish. Key level I would be watching for later on the session or Monday's session would be that high right there. Thursday's high. This is going to be this week's high. If we trade inside of that, I would be looking for a breakout early next week up over that high right there, 71.50. I would be buying 71.51s just to play the break. There's some shorts dug in, but we're still very bullish here. Why are we bullish? Macro sense, we're not necessarily bullish, but 38% retracement, that tells us the market's going to go a little bit higher. I'm interested. I'm very interested. I think we got a chance there maybe to get involved and make a few bucks to the top side. From a macro perspective, and I know this is confusing, but from a macro perspective, this is probably what you should be looking at. We're already buying up over 71.50. That's where the breakout is. Spike high, spike low. Got a lot of room. Next port of call, 72.87, 73. This suggests that there's a prevailing belief that Kamala Harris is going to win the U.S. election. I'm not saying that. I'm just telling you that's what the crude oil traders are saying. What happened the last 2 weeks? A debate. We've seen a lot of polling data too, and Harris is ahead on most of the polls. I don't believe any of the polls, but right now, perception in the energy market is that Harris may win. Why is that big? Because the transition to green energy, the reduction in output, things like the Keystone Pipeline don't get put on the front burner and really fired up and ready to go. That's crude oil, guys. Very simple. Buying above 71.50. I think you could easily play that bubble early next week and make a little bit of money. Back to our gold trade. Are we winning? Heck yeah, we're winning. Let's get up and hit our 62 at 26, 22.50. Now, what I would do right there, because we just switched, I would be looking at my 30-minute chart, and I'd say, okay, we're going to have to turn my ADR on because I'm going to give you a little tip here I haven't really covered. Our ADR, our average daily range, that's also our average periodic range. That's a 13-period average. We could expect about a $6.35 range out of this price bar. What's our low? We should be able to do this. Our low right there is 26.20. I would expect this thing to trade somewhere up in here. Now, if it doesn't, if we break beneath that bar's low, we could easily take out our stop loss. For me, I'm really, if I'm going to make mistakes and lose money, I'm going to lose it with the trend. I have no reason to believe that we're going to reverse, but, our trade hasn't got up and we haven't got paid off yet, and it's a very, very tight range. Volumes are drying up. These are all the things I think about when I'm in a trade. So I definitely want to keep an eye on that. Decent shape. I would have much rather on that initial retracement right there at 21.69 got paid off. I'm a little frustrated there, but that's life. Okay, let's see. Euro USD. This is something that Let's see. I put that one out earlier today. I'm watching for a retracement down in the golden zone. That would be an absolutely beautiful buy. Check out our trade idea. If you missed it, let's go ahead and pull this one here. This is a silver chart. I want everybody to be very, very aware of the silver market. I'm bullish silver. A lot of folks, a lot of real smart analysts out there are bullish silver. For me, I've been buying pullbacks or looking to buy pullbacks. Right there's another one, 30.76. If you'll remember, the last pullback we had was right there from that spike low, that spike low to spike high, and we stressed getting that. We jammed that one home. Go back and watch this week's streams. That was a biggie. That was one we wanted, and we got it. Remember, we got it on Fed Day. You just got to remember that this is just a fantastic market to be long. What time frames? Could we have done the same thing on the 30-minute? We'll go ahead and look at that in a second. But 4-hour chart, you see right there, got a little bit of rotation to the top side. The 30-minute price action, though, is very different in silver. Very different than it is. That's a big sweep, okay? So right there, spike low, spike high, and you'll see silver still fighting at that 38% level. Is it a good trade or bad trade? You're probably still in this one. It's very similar to the gold trade. The difference is, take a look at this price action. Nice big, boom, huge sell-off to open, and then another rally. What did we have in gold? We didn't have anywhere near that degree of a sell-off. Interesting. I'd say gold's the stronger uptrend. We just got to wait and see if we get paid. Silver, bullish bias. I think you'll be just fine if you bought right now. Just got to close that out for the end of the day as well. All right, everybody, I want to thank you for joining me today. Big shout out to my alma mater, University of Montana Grizzlies, class of 2002. Go Grizz. Let's play some defense tomorrow. We got to get the passing game going. If we get the passing game going, we can score some points. I think we have a lot of good players. We just got to wait and see how this year pans out. This team needs to gel. Other than that, I feel good about our team. I think our team's gelled here in the room. This was a big week. If you made money this week and survived, if you lost money, it's okay. Figure out how you lost. Don't repeat the same mistakes. And listen, if you had a horrible week, the next time the central banks come around and you see a Fed, BOE, a BOJ all within about a 24-hour period, 36-hour period, don't do it. Stay out. You remember, every dollar you lose, you have to make back and then some before you can become profitable. Focus on not losing the money up front. Let's make money up front. Let's get what we're going to get up front, and then we'll start trading with the market's money. And then once we trade with the market's money, we can start increasing our size risk-free, and then we start talking about compounding. And that's where the money is. Trade with their money. Don't give them your money. That's what No Donation Friday is all about. Don't give the market your money. It doesn't need it. That's it for me this week, guys. All right, I'm going to sign off here for a couple days. We'll be back on Monday. Big week next week. I'll get it up and going. We have a strategy session planned. I'm going to go ahead and we're going to engage some hardcore trading there Monday on what I think is going to be a relatively flat trading day. We just got to wait and see what happens. All right, everybody, until next time, take it easy. Trade the action well. Get some rest this weekend, and we'll talk soon. See you.